The I, which is income piece, that's based on your debt to income ratios. So you may hear DTI or income ratios. Some may say your debt ratios, but that's debt to income. And what underwriters are looking for and lenders when you're filling out your loan application is your gross monthly income versus your monthly expenses. And that's expenses on your credit report and any like judgment obligations. Maybe it's child support or alimony, things along those lines. What's not included in those expenses or debt is like your car insurance or groceries or gas or your utility bills, your phone bill. Those are not going to be included in those expenses. So keep that in mind. However, your credit card, student loans, auto loans, maybe you have a furniture account on credit, those things will be included if they are popping up on your credit report, even like a second mortgage, home equity line of credit, things on those lines. So as far as gross monthly income, that's your income before any taxes or any benefits, medical, dental, are coming out. So just your gross monthly income. So say you're making $5,000 a month before taxes, that's what's going to be used to assess your income. Another source of qualifying income would be Social Security, disability, or even child support or alimony. Those also can be acceptable income as it pertains to your debt to income ratios. So most lenders will ask you about your debt. Some will even pull credit up front and check out your pay stubs and go over your income to see if you are a qualified buyer when it pertains to the income section. Rule of thumb is you want to be somewhere between 45% or lower, and just to make things simple, if you have $5,000 that you're making per month before taxes, then you'll want to ensure that you don't have more than $2,250 going out per month. And that'll pretty much keep you in line with being qualified for the majority of loans that are out there. Now, I believe USDA does have a much lower debt to income requirement at 41%. But if you're not in one of those areas and you want to do conventional, FHA or VA, if you're under 45%, that's typically going to be a green light on the income side of things, not overall. So some people, and I've talked to them all, and they may make, six figures and feel that, hey man, I make 200 grand a year. How come I can't get any house I want? But they fail to acknowledge that they have about 10 cars and they're all 1,100 apiece. They have 40,000+ in credit card debt. Maybe they have two houses. So their debt to income is maybe 65%, meaning out of what they're bringing in a month, 65% of it is going out the door. So from an ability to repay standpoint, the bank looks at you as high risk, because if something goes wrong, you lose that job, you may not be in a position to continue to pay, and we may have to foreclose and buy back the house and take it from you because you have such a high expense ratio. And believe it or not, I've seen it with a lot of clients that make six figures or more that have a very high expense ratio. And it can be a challenging conversation to tell someone who's making almost, a $500,000, $250,000 that they are not approved to buy a new home based on their credit, even though their credit score may be 700. However, their expense ratio is very high. Maybe they have child support where they're paying $5,000 a month. Then they have 4 cars and they have 5 houses. They can't take on another one. There can be a lot of things that play into that, but what banks are looking for, what mortgage lenders are looking for, is your ability to repay. And on the income side of that, that's based on your debt to income ratio. Again, it's your gross monthly income versus your monthly expenses that are going out. And those are derived from the credit reports. And let's say you have a divorce decree that says you must pay alimony of X amount or child support of X amount. Those will be factored into those monthly expenses as well. So keep that in mind on the income piece, because I know that can be a little challenging to explain to some who may not have that understanding.